Guys, welcome back to the Independent Investor Channel. My name is Ryan. We're filming from Virginia Beach, Virginia. Guys, if it's your first time tuning into the channel, I encourage you to subscribe to the channel. These are some of the coolest videos that I come out with talking about fundamental building blocks of investing. And in this video, I'm really going to address what I feel are the top 5 money-making strategies that you can deploy if you're one of those investors or you're looking to get involved in the stock market and you find yourself all too often being confused or being misled, or you're scratching your head and you've got way too many more questions than you do answers. You know that it's the right thing to invest, but a lot of people just don't have the proper guidance and understanding, what the right path is. All right. And on this particular video, I'm going to walk you through these 5 fundamental premises, and I feel like they are critical for any new investor or any investor to understand really the fundamental perspective in investing, because I say all the time, no two portfolios need to be built the same, and they don't. They really don't. And that really brings me to my first principle that I want to address for you guys. And the first thing that you guys should look to do is identify for yourself what strategy is going to be indicative of you. And all too often, I find when I speak with new investors all the time who have opted to go with a financial planner, they can't explain to me in one single sense why it is they went with a financial planner, other than the fact that they're under the impression that through guidance and strategy, they have some sort of advantage to doing so. You guys need to really understand something that's a fundamental niche of the Independent Investor Channel. And I want you to sit back for a second, and I really want you to think about what the agenda is of the financial planning institutions, okay? And when I introduce an agenda of sort, when somebody is trying to put you on a proprietary program or sell you a mutual fund, there could be some inherent divulgence in what should be good for you as an individual investor and the program that they are trying to put you on. And it brings me back to my premise. Your investing strategy should absolutely reflect what it is that you want out of the stock market. It's yours. It's not somebody else's. It's not mine. You can't look at somebody else who drives a Lamborghini and say, that's going to be my strategy. I want to know what that person did because that's what I want. That is so unrealistic, and a lot of people fall victim to this line of thinking in that they feel like if they just go and they put their money to sleep with a financial planner, that somehow that is the right answer. And I contend all the time that where there is an agenda and they're looking to put you on a program and bring in assets under management, and they're looking to take on as much capital as they can from you, it takes away from some of the very, very fundamental premises that I offer to you guys. Do you think for a second that a financial planner benefits from sitting across from you and saying, hey, the best thing for you is to go into a low-cost ETF or to add some single stock exposure to your portfolio? Of course not. They don't benefit from that. What they benefit from is trying to explain to you how it is that them selling you on a certain number of mutual funds is somehow beneficial for you. And what I teach on the Independent Investor Channel so often is that if people could just understand the fundamental premise of investing on their own as opposed to subjecting their money to an agenda that may or may not be in line with what they actually need in the stock market, you're going to find that the perils and the pitfalls by subjecting your money to a program that is not indicative of your own personal reflection could be very, very costly in the long run. So goal number 1, we really want to try to pick a strategy that is good for you. A lot of people watch the Independent Investor Channel. A lot of people watch other channels and they say, because that person said something, that's something that I'm going to do. That's not the way we want to approach the stock market. We really need to step back and say, what is my tolerance to risk? Am I going to be okay taking my investments into a downturn? How much money do I want to subject to risk in the stock market? And those are really, really important questions that you need to answer for yourself. Don't ever, ever do something because somebody has told you to do so. Always validate the strategy that you're looking to deploy in the stock market. Now that's money-making strategy number one. Number two, you need to ask yourself why. Why you want to be an investor. Why it is you're seeking out a higher level of financial compensation in life. For a lot of people, they don't want to be an investor, but they try, all right? And those folks are the ones that are going to get involved and they're going to falter because they've built their investment portfolio on false pretenses. They haven't done the preliminary work to understand some of the benefits of investing. And I'm not talking about getting invested in the stock market to make money. Okay? You can't just say, I want to get involved in the stock market because I want to be a millionaire someday. I don't want to get involved in the stock market to make money. Okay? What you do need to understand is there are certain fundamental benefits of becoming an investor, one of which is compounding interest. We talk about it all the time, and if you just understand the fundamental premise of compounding interest and what goes into it and how your money can work for yourself, it will tune you into the importance of being long-term in your program, along with some of the other benefits. I often say that dividends paid to an investor is about as close to a guarantee that you can possibly get in the stock market. Now, a good dividend is going to pay 2 to 4%, but isn't that nice to understand when those dividends are paid, if they're paid monthly or typically they're paid quarterly? Those are the types of things that you understand about what it is you're seeking out in the stock market when you potentially go after an ETF that pays a dividend, or you go after some single stock exposure in your portfolio that pays a dividend. What does that mean? How can we accelerate our dividends going forward by entering into a dividend reinvestment plan? How is it that we can lower the fees and expenses within our investment accounts? Is there a way? Is there a path that we can look forward to lower our fees? Is there a way that I can invest money every single month to allow myself a better opportunity to average up in the stock market? Absolutely. Dollar cost averaging is one of those tried and true fundamental premises in the stock market. It's very, very helpful for you to understand why it is that you're becoming an investor. And if you look at these small aspects and not just invest on blind faith, you're going to be the one that has the fortitude and the perseverance to keep strong on a program, the strategy, right, that reflects you, and you're going to be able to weather those downturns and actually take advantage of them when they come. So you really need to make sure that you validate and answer the question, why? Why is it that you want to be an investor? And if you can do that, you can mentally prepare to be tough in the stock market. Number three, I see this mistake all the time, and that is to be realistic with your expectation, okay? I deal with folks all the time. They invest. Their money goes up a few $100s in a year, and they don't understand why it is they subjected their money to risk only to make a few $100s. Or maybe they're even down and they just do not understand why it is they're doing what they're doing because they're not realistic with their expectation. They expect to get short-term validation by constantly watching their money, And invested dollars are only going to pay an investor back if they are allowed to work over time. Okay? You cannot just expect to look at the market, especially on a day-to-day basis, which absolutely means nothing to somebody. But all too often I see this critical error of new investors when they look at their money on a day-to-day or a week-to-week or a month-to-month basis and they don't understand why, and they get frustrated as to why their money is not moving. And another thing that kind of goes along with this being realistic is to understand that because one person does a certain thing and is successful in doing so, you can't expect to get involved in the stock market and enjoy those levels of success until you build your portfolio up to that. What I mean by that is if you're looking to invest in the stock market and you have $1,000 to get started, your first goal in the stock market should be to get to that first $10,000 mark. You don't need to be looking at somebody with a six-figure portfolio and saying, wow, I want to trade stock like that person, right? It doesn't do you any good to focus in because you're deploying techniques that are good and appropriate for that portfolio, as opposed to just focusing on what is good for your portfolio, and that's building a fundamental base. Premises that I teach along on the Independent Investor channel all too often, and so many people want to constantly get that short-term validation. And in the stock market, short-term validation really will only set you up for disappointment, okay? So you really need to be realistic about your expectations, okay? Now, strategy number 4, one of the most important things that I tell investors, and this is, I really hope this resonates with you guys, because when I'm talking to new investors, I talk all the time about the importance of the psychology behind investing. Everybody wants to jump to the portfolio right away and start throwing stocks into a self-directed Roth IRA account, which is the fun part about it. If you are ill prepared to do just that, you will falter in the stock market. And what I mean by that is so many people just want to jump to the end result, start investing in stock without going through the preliminary justifications of the strategies that I just laid out for you, okay? You always want to just aspire to making money in the stock market, or your friend told you it's something that you had to do. None of those things make any sense to you whatsoever, but you do it anyway, right? And we jump in and we put our money into a plan, but we do so tentatively, okay? We do not commit to that plan mentally. Yeah, we buy the stock, okay? Anybody can go out and buy a stock, all right? What I teach along is the fundamental premise to understand that to be successful in the stock market, you must commit to your plan. You cannot falter in the plan that you put in motion. You have to commit to it. I always say, if you're going to be an investor, commit to it. If you're not going to be an investor, don't be an investor. But don't be stuck in the middle and be wavering on your plan. You will end up faltering at some point in your investment career, and you'll end up probably pulling out for a loss or not being as committed as you need to be to understanding and justifying why it is you've already validated why it is so important to commit to the plan that you've put into motion. And the last and final thing that I want to talk to you guys about being a new investor, and I really hope this struck a nerve with you guys. If you dare to dream within a few minutes on YouTube and you've tuned into this message and you're a new investor out there and you know nothing about investing, I always say, investing is something that everybody should do. It's something that everybody should do. Everybody. And the misconception is that everybody needs some sort of experience in the stock market. Well, how are you going to get experience if you don't have the courage to start and do something on your own? You're never going to have 100% of the validation that you need. My charge to you is to get enough validation that you need to take that leap of faith and get yourself invested. And this kind of comes into my last goal for you guys. If you do take that leap of faith and you deploy some of the strategies that I talk about all the time in my videos, guys, I wouldn't mention them unless they were the best strategies for making money. They are the tried and true methods of making money. But if you can abide by rule number 5, you will be that much more set up to succeed in the stock market. And goal number 5 that I have for you is to evolve. You must be open to evolve. If you are looking to build a portfolio that is amassing a fortune in the future, you have to be able to recognize when you go from a portfolio of $1,000 to $10,000 to $50,000 to $100,000, you have to allow yourself to always be open to new strategies. You're not going to be able to deploy the same strategies of buy and hold up to 10,000 or buy and hold up to 50,000 that you're going to deploy when you get a six-figure portfolio, okay? Now, the strategies that are deployed from 0 to 10,000, right, are actually very simple. They're buy and hold strategies. Those strategies will never ever go away. But when I talk about evolving as an investor, you need to understand that we're not putting this plan in motion to not make money. We're putting this plan in place so that you can build wealth over time. Make no mistake, if you abide by sound investing principles, guys, you're probably going to surprise yourself and you're going to end up making money in the stock market. But what I want to charge you with is the importance of being open-minded and evolving in your thought process, because where you've deployed a strategy from the $0 to $10,000 portfolio, that strategy is going to remain with you the rest of your life. What you're going to do is you're going to add on different strategies of buy and hold, buy some single stock and hold as an investor, maybe enter into some trading positions, maybe set up a pillar in your portfolio of maybe some fixed equity exposure. As we look to build and we look to evolve, I felt like evolving was one of those things that so many people miss, in that they deploy the same cookie cutter strategies and they expect the same level of performance out of their money year in and year out. And I think that can be one of the most costly mistakes that not only a new investor can make, but to lose track of in our goal setting and where we want to go as an investor. Guys, thank you so much for tuning in to this fundamental stock investing video for new investors. It is so important that you take the concepts of somebody like myself who has been investing for 25 years, guys. In about a 15-minute video, I have condensed the lessons that I have learned into 5 strategic steps. And if you heard the message and you dare to dream and you dare to deploy some of these strategies in your investment career, guys, it'll make the world of difference. Guys, if you haven't subscribed to the channel, I highly encourage you to subscribe to the Independent Investor channel. We are growing leaps and bounds because the sincerity of the message comes through. And just like I've said since day one, we are looking to empower individual investors to understanding the power of direct connecting their money to the stock market and eliminating the need for a middleman. Guys, leave your comments at the bottom of the video. And if there's anybody out there that can benefit from my message, anybody out there that's looking to get involved with the stock market and they're looking to just get off on the right foot in the stock market, it is so important that people get off on the right foot, because I see it all too often that people, when they're looking to start in the stock market, unfortunately falter in missing one of these 5 critical steps. Guys, thank you so much for tuning in, and good luck in your investment future.